Now, real estate is the best investment bet in Kenya this year, with politics expected to play a major role in determining returns in other sectors. Now, Cytonn Investments 2016 Outlook report stated that local and foreign investors' funds were best placed in real estate, which recorded a 29% growth in 2015. Now, the report also noted that the transfer of power from the central government to regional administration has created a further need for residential and office space in the new areas where job and investment opportunities are growing at a fast rate. The investment firm has predicted a 5.5% to 6.5% growth for 2016 if Kenya keeps politics out of development and business matters. Well, now joining us in the studio to give some insight into Kenya's investment landscape this year and, of course, the outlook for regional and global markets is Maurice Oduor. He's an investment manager with Cytonn Investments. Maurice, great to have you on the show. Now, looking at Cytonn's 2016 Outlook report, you point to real estate as the highest returning asset class in 2016. Now, why real estate instead of the bond and equity markets?
Thank you, Uche. If you look at real estate investment, there are some aspects of that asset class that makes it more unique. We are coming from an economic environment that was somehow characterized by high inflation environment. We are moving now again to an environment that will be characterized by high interest rates. And if you look at real estate going forward, this is an asset class that is always not affected by the inflation. It provides a hedge in terms of inflationary pressure. And again, it's an investment as much as high interest rates affect credit uptake. Real estate is not really that affected by the high interest rate environment. And again, if you look at the performance of real estate, usually not correlated with the traditional asset classes like the equities and the bonds. So moving from moving on to 2016, we expect real estate to be again the best asset class. And again, we saw in the year 2015, it was again the best asset class, achieving a return of 9%. Again, it's a traditional asset class which achieved a return of average of 10%. And if you look at again in terms of longer term horizon, in terms of the 5 years for investment horizon, real estate again have constantly generated a double-digit return in the league of the 20s compared to traditional asset classes that have done an average of 10%. So going forward, we expect that this is more demand-driven, and again, the prevailing economic environment supports real estate.
Now, Maurice, what is your response to people who ask how sustainable real estate will be in the short to long term? And of course, you talked about interest rates, but is there really adequate access to financing both on the supply and demand side?
Thank you, Uche. In terms of that question, I'll break it into two. One about sustainability in terms of the demand and the return from this asset class. If you look at real estate, one again, look at Kenya where we are. There are rapid rate of urbanization that is opening up parts of the country that traditionally were not accessible. If you look at again around the country, there's a new system of governance in terms of county government, the devolution and the centralization of power from the central to county levels of government that's opening up again so many parts of the country for development. In terms of infrastructural development going around, again, that one is very key for real estate, again, helping in sustaining and ensuring that there's demand. The usually house deficit that usually reported by the government, and currently, according to the data from the Kenya National Bureau of Statistics, the deficit stands at 200,000, which again, there's strong demand that is helping again generate return in this asset class. When I go to the bit of financing, allow me to break the bit of financing into two in terms of the developers and now on the supply side and on the demand side. On the supply side, there are a lot of global capital that are looking for home in terms of where they can generate attractive returns. If you look at the regional countries, like in the countries that are in Europe, countries that are like in places like US, they are generally roughly getting a return of a GDP growth of about 2%. That's the US. And if you look at Europe, Europe is not even growing. And now there's huge capital in this region that are looking for home where they can generate strong return. And that one now comes, the only region that is generating like about 6% GDP growth going forward is Sub-Saharan America. And now there's a lot of capital coming from those developed markets looking for home in Africa, and especially Sub-Saharan Africa, where there are still a very attractive investment opportunities, which is helping driving real estate. And again, if you look at in terms of still financing for developers, there's initiatives going on currently in the capital markets in Kenya that's aiming at providing investment opportunities like REITs, and this one I'm talking about development REITs, that again will help developers in terms of mobilizing capital for investments from the capital market space. If I move now to the demand side in terms of people that are looking at having exposure in real estate, people that are looking at buying real estate as a house, as in terms of houses. If you look at again in terms of having exposure in real estate,
Right.
last year in Kenya there was an IRIS that was listed, which again now giving Kenya opportunity
Right.
as opposed to owning a full-blown building in
Right.
terms of exposure in real estate. Now Kenyans can even own a piece of real estate in terms of REIT that they stand to get return in terms of rental income on a periodical
Maurice.
basis. And if you look at it again now,
Well, Maurice, I mean, certainly it looks like the real estate sector is really a place to put your money in 2016. Well, thanks so much for giving us those insights. Of course, he is an investment manager with Cytonn Investments.